Ho, 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 ho. I think the hardest thing lately, guys, is learning you can only control or only worry about the things you can control, and then realizing how few of those things there actually are. Very few of them. But the good news is if you can actually start implementing it, means you have a lot less to do. You can become a lot more effective at it because you're wasting a lot less time worrying about the things you can't control and trying to change them. That's all I got for you today. And that was just other smarter people's words off the top of my head. Whew. Let's go. Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. Today we have tons of fun topics, including TCL leaking some 7700 XT details. It's looking really slick. We have Chinese OEMs repurposing mobility GPUs for mining. We have Nvidia crypto mining chip revenue taking a dip, obviously. And we have Metamask has a plan to help victims of crypto scams. I think that's important. The difficulty bomb has been implemented, is going off, and is affecting the network. Our average block times are now 14 seconds. Terra snapshot expected this week. I wanted to cover what's going to be happening with the new Luna distribution. And then we have the crypto security debate going to court. Essentially, we're going to be talking about regulations surrounding specifically Coinbase, I believe it is, and a bunch of listed tokens on there. Just more attacks on, of course, the cryptocurrency, industry from, of course, the government's. JP Morgan backs Bitcoin to rise 28% in an interesting move. As we see today, it is affecting the markets where Bitcoin has really kind of held pretty steady and alts are taking a There you go. Let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Welcome back, everyone. First things first, TCL leaks the next-gen AMD Radeon 7700 XT. Let's go ahead and get this sorted real quick, and we'll get right into it. Boom, bam, wham, bam, thank you, ma'am. Let's get it. All right, so this is coming from WCCF Tech. In a presentation by TCL, the company seems to have leaked out several next-gen products, including AMD's Radeon 7700 XT graphics card, the Sony PlayStation 5 Pro, and the Xbox Series S and X consoles, all of which will be 8K capable, according to the TV manufacturer. This is pretty incredible news, because if we're getting basically a 7700 line that's 8K capable, Heck yeah. TCL recently held a press conference in Poland where it revealed its expectations of upcoming gaming hardware that will push us into the Gen 9.5 or 8K era. Now, surprisingly, TCL didn't hesitate and mentioned several unannounced hardware during the presentation from AMD, Microsoft, and Sony. The products include the likes of AMD's Radeon 7700 XT. I'm looking for it on the slide. I don't see it here yet, but let's keep reading. The Sony PlayStation 5 console and also the new Xbox Series S and X updates. The manufacturer stated that they expect release of these products around 2023 to 2024. And will be capable of 8K 60 Hz to 120 Hz output. Now, whether these are TCL expectations or something that they internally know remains unknown, but specifically mentioning AMD's graphics card seems to make us believe that TCL it has a hint or two of what's coming next. The AMD Radeon RX 7700 XT graphics card has not been announced yet by AMD, nor AMD has shared any details, but we know from leaks that it will be the first of the many RDNA 3 GPUs based on the Navi 33 graphics chip that will be coming to the market. The GPU will feature a monolithic design, and unlike the chiplet design that the top Navi 31 and 32 GPUs utilize. As for the two consoles, there have been rumors about 8K capable Sony PlayStation 5 Pro and a refresh of the existing Microsoft Xbox Series X and Series S consoles a while back. These are not truly next generation consoles, but a spec update for existing ones similar to the mid-cycle and console refresh that we saw for the PlayStation 4 Pro and the Xbox One X. A 2023 to 2024 timeframe is believable, but once again, we can't assure that if these will be the product names they would go by. Expect modern features such as FSR2 from AMD and other upscaling techniques to help gamers get to the 8K resolution. Now, as stated earlier, this could all well be an expectation from TCL and nothing concrete, but it will definitely be nice to see some 8K hardware and a proper one coming to gamers by 2023 and 2024. Obviously, it's interesting news just to see that we may have essentially like a mid-tier GPU in the 7700 that is a monolithic design and not going to be utilizing the multi-chip module setup, be able to support 8K at least, just to set expectations, not natively, but utilizing FSR 2.0, which is definitely something that would be utilized to reach that 8K, at least by my estimations, because even 4K, even 4K at 120 Hertz, which is kind of what we're sitting at here with like the new consoles and so on, isn't really native, right? Most of the time there's some sort of scaling feature going on with it, but the scaling features and technologies have gotten incredibly good. Back in the day, I would never want to utilize a scaling feature, and now I like to use them a lot more often than previously. As far as impact for mining, we still don't know. We've talked about the rumored specs for the 7000 series as well as Ada Lovelace. I'm leaning more towards, of course, the 7000 series now that we have rumored specs of upgrading that memory bandwidth to 384-bit. And that would be, of course, for memory-intensive algorithms like ET hash, ETC hash, as well as Ergo, and will have some impact, of course, on other algorithms too, like Ravencoin, but not to the same extent, or to Flux, for example, but once again, not to the same extent. However, with both the 7000 series and Ada Lovelace, we are supposed to be getting close to, if not cracking, that 3 gigahertz on the core. So there should be benefits as well to core heavy algorithms coming down the pipeline too. At what power cost price, though, is really going to be the question. Chinese OEMs, though, are repurposing the RTX 30 mobility GPUs as desktop-grade mining cards to tackle the LHR crackdown. Chinese and South Pacific PC OEMs have started to repurpose Nvidia's GeForce RTX 30 mobility GPUs into mining-ready desktop graphics cards. This move has been down not only to bypass the LHR restrictions, which are kind of a moot point at this point, except for 3.0 on the 3050 and the 3080 12 gigabyte. So seems like this was definitely something that was probably being worked on, probably has already been implemented and deployed in other countries like China, for example, that is now just starting to hit the news cycle. That's the best I can tell. Pictures and retail listings of several repurposed graphics cards were posted by iLeakVN. Asian OEMs are repurposing several of the mobility GPUs, primarily the RTX 3070M and the 3060M, to meet the demand of the crypto mining segment, which is waning with, of course, the threat of the merge and the dip in the altcoin prices right now. Once again, like I said, it seems to be kind of a later news cycle. This was something that maybe would be obviously a lot more beneficial earlier on. Although the demand has died down quite significantly, there are still some people who are investing in the ecosystem and expanding their existing setups. And that's fair enough. We did do some votes. Most people are in pause mode right now from our last polls that we've done. When I asked, are you upgrading your mining equipment? Most people were saying they're on pause until the prices come down on the GPUs. Some people did say they were quitting altogether. Very few people, less than 10%, said they were currently actively purchasing new equipment to mine with. What's happening here is simply the case of taking an Nvidia mobility GPU and putting it on a desktop grade PCB with a desktop grade cooler. The mobility GPUs feature the same die, so compatibility of existing PCBs will not be that hard to achieve. However, they do come with vastly different core specs, which are inferior to the actual desktop offerings. Just for comparison, the Nvidia GeForce RTX 3070 graphics card is based on the GA104 GPU with 5,888 cores, 8 gigabytes of memory, a 256-bit bus, and a 220-watt TDP. The RTX 3070M for mobility platforms features the same GA104 GPU, but comes with fewer cores and a 115-watt TDP. That's pretty impressive and would be a nice conversion to a mining GPU. The RTX 3060M and 3060 are a different story, as the mobile variant comes with a higher spec GA106 GPU core with 3,840 cores, but a lower 6 gigabytes of VRAM at 80 watts, while the desktop variant comes with the same GA106 GPU, but with fewer 3,584 cores and a higher 12 gigabyte memory capacity at 170 watts. As for the mining performance, the RTX 3070M graphics card offers around 65 megahash a second of crypto mining performance in Ethereum. That's impressive. This should net you around 120 to 130 a day in earnings. I do not think that's accurate right now, but we'll check in a second. Also, since these cards aren't based on the LHR design, the recent driver level crackdown by Nvidia won't affect them. It wouldn't affect them anyways, I don't think, because it would probably be 2.0 and not 3.0 LHR. The GeForce 512.95 WHQL driver actually enforces a half hash rate on the LHR cards, and although it can be reverted by rolling back to previous drivers, it is still going to be a bit of a frustration for miners. Not really, because for the most part, we're all utilizing Linux and we aren't updating drivers, right? So I suppose what I'm understanding here is that Nvidia, and let's go ahead and pull this up. I did not know this was happening. I guess we're just finding that. Yeah, so the RTX Empire Strikes Back, another topic to talk about. Nvidia is taking a stand against the 100% LHR unlock. Woo, that's a big topic. So let's go ahead and finish this one up though. So here's the 3070Ms. They're starting to get listed. I think really honestly that 3070M is sounding really enticing because 65 megahash a second on 115 watt TDP means, like, frankly, you're probably sub 100 watts for 65 megahash a second. And that is super duper good. The GeForce RTX 30 mobility lineup not having any LHR SKU does save them from this. The new drivers also enforce LHR so that even the mining apps that is offering 100% LHR unlocks cannot offer the full hash rate. Now, one thing about these cards is that they will have some resale value compared to traditional headless mining cards since they come with display outputs. Users who just want to play games after they're done with mining can do so, but such cards will flood the used market once their mining life is complete, which means no one will know how much these cards have been abused by the crypto businesses. Once again, for the most part, we take care of our graphics cards pretty dang well. That being said, I think having display outputs is awesome, and that's a welcome change to kind of the crypto mining specific GPUs or developed GPUs. In the past, when we get those, we typically don't get some sort of video output. That makes resaleability hard. Even how low of the resaleability you're going to get for it, at least something's better than nothing. I think right now we're going to see lots of liquidations, of course, though, and looking for some of those crypto mining specific cards isn't a bad idea if you're wanting to expand your farm, at least in my humble opinion, during the bear market, because they will be at the lowest price point. Should we be talking about P106s and stuff, though? Probably not. The ones I'll be looking for would be the newer CMP line, specifically like the 175 or the 170HX, etc. All right, so Chinese retailer outlets such as Taobao, I don't know, I botched that one, have listed a large number of these graphics cards, and we would ask our readers to avoid buying these cards as there's no guarantee of how much these are used already. I'm in. Send them my way if they're cheap enough. I don't know. Plus, pulling the GeForce RTX 30 mobility supply away from laptops to crypto cards means that we are going to see DGPU powered laptop prices shoot up. I don't know that I think that's the case. The good thing is that the whole crypto system within the DIY segment has slowed down tremendously, so we are sure that these cards aren't something new that's happening now, but have been going on for a while, and now prices have really come down due to poor demand for such hardware. And I don't think that's for the DIY segment of the crypto miners. I think that these cards were specifically going to the large mining firms, which means that basically the large mining firms aren't purchasing as much anymore, so they are trying to sell them to the DIY segment, hence their listing. Now, we've talked about this before, and during a big downturn, the greatest opportunities will be exposed. And as a, DIY mining segment, as this channel, will now be branded, I suppose, that's going to be the new term to coin. As the DIY mining segment, we should be paying attention to taking advantage of a downturn in the market, because it will be the only time to catch up with the large firms. Now, whether that is moving into ASICs for Bitcoin or sticking with GPU mining will be, I think, the biggest debate to have that we need to discuss. And we will actually discuss that a little bit here in a second, because obviously, if you take a look at the markets today, Bitcoin's holding, everything else is not. Let's catch up on this last minute news. For Nvidia's latest graphics card re-enables light hash rate, but not permanently. The latest 51295 driver no longer allows the bypass for the light hash rate crypto limiter on RTX 30 series. Upon installing the new drivers, all Windows-based mining software will revert to the original hash rate, which is usually 50 to 70% depending on the algorithm and software. The new driver does not permanently re-enable the light hash rate though. Miners can simply install the previous 512.77 driver, which comes with the full light hash rate unlock. Therefore, this is not exactly a huge problem. It just means that casual miners, so the least problematic part of the mining community, will need to decide whether they want to mine or play the games with the latest drivers. And that's really not too much of a problem either, because you can just install, the new driver to play whatever game you want and then reinstall the old driver if you want to mine on it and you're going out of town for the weekend. The fact that Nvidia wants to block the most basic and smallest form of miners is a really telling story about, I think, the industry as a whole. What they want to do is block the average person from participating in something that generates revenue, no matter how small. And that is very frustrating coming from my perspective, the DIY mining guys, because it's history repeating itself, and it's very, it's the antithesis of what we would hope crypto would turn into. I've talked about this before, where I would prefer everybody makes a little bit and it's more distributed, hence why I kind of like Monero quite a bit, than basically large firms, all and one or two companies making all of the cryptocurrency from mining and so on. So this is really just an attack directly on decentralization is how I see it, right? Not that I think that is NVIDIA's perspective. I think NVIDIA's perspective is clearly trying to save face in all of these crazy controversies surrounding cryptocurrency mining, especially since it's clear that they lied about it and they have been caught now by the SEC. Light hash rate was Nvidia's desperate attempt to discourage miners from buying their cards. No, it was their desperate attempt to save face from outlets like video cards, right? They wanted basically all of the media to report that they care about gamers. It was a PR move. Okay, it was a PR move. It wasn't really a move against miners because they clearly had stock. And for the miners, that was where they were sending all the large shipments, guys. That's what was going on. All it really did was prevent normal people from participating. Light hash rate was Nvidia's, yep. So unfortunately, the crypto mining community was quick to crack the LHR, and 70% hash rate unlock came fairly quickly after the first light hash rate cards were released. However, the full light hash rate unlock has been available for only 2 weeks now. The 512.95 mining lock has been confirmed by YouTuber Juliano Kaju. His RTX 3060 card is limited to 25 megahash a second with NB miner, which is a lot slower than 46 megahash a second on the unlocked driver. So he has that all placed in there. And it looks like they're attempting to basically save face with a software solution. And as we know, that never really works anyways. So it's kind of a moot point. That being said, be aware, if you install the latest NVIDIA drivers, they're going to have software locks within it to stop you from mining with the full light hash rate unlock 100%. If you were looking at buying GPUs too, I'm going to take a look at these OEM repurposed mobility GPUs because they sound increasingly efficient. NVIDIA's crypto mining chip revenue now nominal following months of decline. Now, this is coming from CoinDesk, so more of a crypto perspective on what's going on with NVIDIA and cryptocurrency mining. A drop in crypto mining chip sales dragged down the chip maker's OEM business unit year over year. Chip giant Nvidia said its contribution from sales of cryptocurrency mining processors, CMP, was nominal for its 2023 fiscal first quarter ended May 1st, 2022. So it's 2022 fiscal first quarter, not 2023, but there you go. We'll correct that. Constituting a drag on year-over-year revenue for its OEM business unit. Nvidia said first quarter revenue for its OEM and other business unit fell 52% to $158 million from the same quarter last year due to a decline in its cryptocurrency mining processor sales, according to a filing. So you guys want to file and be honest about it when you're losing money, but when you're making a shit ton of money, you don't want to say nothing, do you? Oh, you sneaky, sneaky dogs. The chipmaker didn't disclose the specific amount of sales for its mining processor unit in the first quarter, but labeled it as nominal and down from $155 million a year ago. And of course they don't want to state this because just like TSMC, Nvidia doesn't want their investors realizing that essentially cryptocurrency mining has been the number one reason for the advancement in computer parts technologies over the past 6 years, something like 6 years, especially on the GPU side, but on the CPU side as well. A lot of what brought AMD's Radeon department from the brink, especially seeing that all they really had was Polaris, and they got lucky with Polaris being really good for mining. The only thing that brought them from the brink of basically complete collapse was cryptocurrency mining. And they don't want to admit to their investors that cryptocurrency mining is the number one thing that has enabled them to advance these GPUs so quickly in recent years, right? We're getting much more frequent releases of GPUs. We're getting incredible advancements in graphics cards. And a majority of that money has been coming from cryptocurrency mining. And if they let the investors know that, the investors will get sketchy and nervous when they see dips in the cryptocurrency market that they will assume, of course, and accurately assume probably, not financial advice, will affect the companies that they're invested in, right? And that is just that it's a sneaky game. And that's the reason why they don't want to report exact numbers. It's the same with TSMC pulling it off of their reports. It's just the way the cookie crumbles. It is a little annoying that they just ignore it, though. This comes after the sales of the CMP unit continued to decline with the price of cryptocurrencies in general. In Nvidia's previous quarter, CMP fell 77% from the previous quarter. Nvidia's total first quarter revenue was $8.29 billion, beating the consensus estimate of $8.12 billion, according to FactSet. Its OEM and other unit contributed about 2% of the first quarter revenue. Adjusted earnings per share of the $1.36 beat consensus estimates of $1.30 a share. However, Nvidia gave fiscal second quarter sales guidance of $8.1 billion, which missed the consensus estimate of $8.4 billion. The shares of the chip maker were down about 7% in after hours trading on Wednesday. And on May 6th, the U.S. Securities and Exchange Commission said Nvidia failed to disclose that crypto mining was a significant contributor to its 2018 revenue, and the company agreed to pay a $5.5 million fine to settle the charges. Why would they want to settle the charges for $5.5 million US? Let's just think about that for a second. That seems like a lot of money to you and me, but to someone like Nvidia and the amount of money they're making off of cryptocurrency, it's probably a drop in the bucket. I would assume we're in the billions, if not, we're in the billions, right? Easily, Nvidia is in the billions, more than likely, off of crypto mining revenue specifically. They realize that the markets are taking a downturn, that alternative coins that are mined by GPUs are waning, and it is less expensive for them to pay a fine than for their investors to find out how much they were actually making off of cryptocurrency. That's just it. Let's get into this. Metamask has a plan to help victims of crypto scams. The popular Ethereum wallet has partnered with recovery specialist Asset Reality. Metamask, the browser-based wallet for navigating the world of Web3, can now help victims of crypto scams and phishing attacks recover their lost assets, or at least try to. London-based Asset Reality A specialist when it comes to investigating and recovering stolen crypto assets, will act as a case handler and help Metamask users around the globe build an investigation in the event they fall victim to fraud, the company said Thursday. Metamask, which now boasts over 30 million monthly active users, sees a good deal of ticket requests related to losses, many of which involve malicious actors conducting phishing attacks or orchestrating social engineering of some sort, said Alex Herman, Metamask's support product lead. Quote, "We want to offer something to users beyond a handshake and good luck at the end of our interaction," end quote, said Herman in an interview. So partnering with Asset Reality gives users a way to start an investigation to try and track down their stolen funds and possibly lead to a recovery down the line. It means there's at least some light at the end of the tunnel. The average amount lost in crypto scams is an eye-watering $25,000 according to Asset Reality, but can occasionally exceed $1 million. Part of the recovery process involves blockchain analytics. Asset Reality works with a number of crypto sleuths, including chain analysis. Then there's the more traditional heavy lifting needed to commence civil litigation, usually involving lawyers serving information notices on exchanges and so on, said Aidan Larkin, CEO of Asset Reality. This helping hand offered to wallet users comes courtesy of MetaMask. Asset Reality is not in this to win some percentage of assets recovered, Larkin added. Once a MetaMask user makes a report, Asset Reality carries out an initial investigation involving some blockchain analytics, which provides the user an understanding of what has happened. The recovery firm also acts as an expert witness if the user wants to be connected with a lawyer or get together into a large class action, Larkin explained. Quote, "This is about people being able to make their initial report and being able to pursue their case with trusted partners," end quote, Larkin said in an interview. "We're not saying you're going to get your funds back tomorrow. These are civil litigation cases and very complex, but there will be those opportunities where we can identify stolen assets sitting on platforms around the world, who will collaborate and work together to legally get back the assets back to the victim." I disagree with this method from the very get-go, right? You're attacking a problem that really started with ignorance, and I think that the main way that you prevent all of this is with education, and through education on channels like mine and other cryptocurrency channels. I think there's been a lot of irresponsibility surrounding the NFT crypto channels, along with a lot of the trading channels. And there should be a reiteration of how to protect and secure your keys, how to avoid phishing scams, and how to secure your assets with two-factor authentication. If you're a miner, obviously these types of things will be important. I think education solves the problem, and I get it. Like, there's this whole argument, this defeatist attitude that is surrounding basically the idea that people are idiots and they'll never learn and blah, blah, blah. I don't believe that for 1 second. I think that a private key and learning how to secure it can be accomplished by anybody. And so I think that personally, from my perspective, education is the way you help victims of crypto scams. And hopefully you educate them beforehand. Now, I think MetaMask has gone to some extent when signing up to get this sorted. And I think that they could add another video when recovering a key that says, like, are you sure you're recovering a key? Did you create this original wallet? That sort of thing. If you didn't, realize that you should not deposit funds to this wallet, that sort of thing, right? That's my personal feeling and thoughts behind it. The average block time for Ethereum blocks has started to creep higher, rising by 5% since April. The difficulty bomb implemented in EIP 4345, specifically to attack miners and implement a poison pill to stop them from forking a failed proof of stake move, is basically what we are looking at, right? The difficulty bomb implemented there has started to be noticeable, with average block time intervals increasing from 13.3 seconds to 14 seconds. 0.7 seconds. It's going to get a lot worse, boys. And the reason it's going to get a lot worse is because it's an artificial increase in difficulty on the network. This means that regardless of how many miners are on the network or not on the network, you are going to essentially see a complete destruction of block times on Ethereum. What this is resulting in, of course, is some of the lowest fees we've seen on Ethereum as people move to other platforms already. As the block times get longer and longer, I assume Ethereum could just basically kill themselves off with basically poor operating networks. This is going to get interesting really quick, and I'm excited to be alive and reporting on this as we see one of the biggest, I think, news events that we'll ever see surrounding cryptocurrency as we get closer to the merge or not merge or reversal of it. Who knows, right? I know that Bitsby Trippin is working on talking to Ethereum developers about the problems he sees with proof of stake and I guess delaying the merge and so on. I don't think that's going to happen. I think they're pretty stubborn. Specifically, I think Vitalik is extremely stubborn. We have heard from him that he is fine with block times going to 25 to 30 seconds. And I believe him. If you are in a position where someone you participate with and are in a relationship with tells you something that's going to negatively affect you and straight tells it to your face, I think you should believe him. And I believe Vitalik in this. So, yeah, that's what I think. I think it's coming. But let's get into Terra Snapshot expected this week. Here's how the new Luna will be distributed. If you guys aren't aware, essentially the Terra Luna UST fiasco happened, I guess last week now, or is it week before last? It's hard to keep track these days. We do videos every day and do these live streams every day, but essentially it resulted in the crashing of the stable coin. There was an algorithmic stable coin, as well as a crashing of Luna itself, because that was what was backing the stable coin. They tried to recover by pumping in the backing and moving it from, of course, Terra to Bitcoin to back it. That didn't work out. And now I guess this is the last ditch effort here. The supply of tokens on the new blockchain will be just over 116 million, the developers said. A snapshot of Terra blockchain is expected to take place later this week ahead of the launch of Terra 2.0, a so-called revival of the Terra ecosystem following the implosion of the Terra USD/UST algorithmic stablecoin earlier this month. The revival plan is now moving forward after the conclusion Wednesday of a vote among network validators with a 65% approval rate. Investors who held over 10,000 Luna tokens before UST's implosion will receive the new tokens periodically to prevent immediate selling. Over 30% of their tokens would be unlocked initially, and the remaining 70% would be released over 2 years. New tokens will be distributed after 6 months to such holders. This is what happens when you have a centralized system, maybe using proof of stake as a consensus method, for example. This is what happens, right? Is that now they have to solve a problem, and the only way they can solve the problem is by manipulating the supply. And so they have to take a snapshot, manipulate the supply, and then they have to make sure that they don't dump it too fast on everybody, because they started from a position that was weak. They started from a manipulated position that was never going to be successful in the first place. The only fair distribution method that will ever work is going to be proof of work. This is something that we've talked about plenty of times. Even the proof of stake projects that know how to function and know what they need to get to, if they want to have a fair and open release, go with proof of work initially and then migrate into proof of stake. That is because the only fair way to distribute is proof of work, and that is just a fact. Wallets with more than 1 million Luna or UST prior to UST's depegging from the dollar would have to wait more than a year before receiving any tokens, with a 4-year vesting period thereafter, according to the revival plan. A snapshot, meaning a recording of the state of the blockchain at a specific point in time, will allow Terra to send the newly issued Luna tokens to holders of old Luna. This would, in theory, allow old holders to regain some of their lost investment value while incentivizing usage of the new blockchain. Here's what it will incentivize. Everybody will go ahead and participate in that new blockchain to dump it as you slowly give it to them. Everybody that is looking at buying into this should be extremely careful and extremely cautious. Not financial advice, but I wouldn't touch it with a 10-foot pole ever. That is just the end of story for me, because what you will be seeing is a complete manipulation of the currency by the developers to try to make it look like it is doing well. And they will do this by restricting the amount that they're sending to these holders. And then these holders will, in fact, because they've been hurt by them, will go ahead and dump them as fast as possible. Do not go into the exchanges and buy it off of these people that are trying to recover their losses from a poor investment. You will be not happy. The snapshot for Terra 2.0 is expected on Thursday. Going by block times, the post snapshot block 7,790,000 could happen as soon as May 26, 2022. Terra developers said in a post on Tuesday. The supply at Genesis is considerably lower than anybody is anticipating, closer to 116.7 million, rising to 182 million after 1 year. They added addressing community concerns about a highly inflated Luna supply. Oh, it'll be highly inflated. And they'll be highly deflationary through manipulation, which will just be hiding the inflation, because as we know, anytime you have a managerial class that is controlling any type of currency, they create the inflation. That is the way it functions. And then they try to hide it from everybody participating within that economic system. And that is true for, of course, the US dollar and pretty much any other fiat system as well. In early May, UST lost its peg with the US dollar and fell to as low as 7 cents in the weeks afterwards, causing prices of its related Luna token to drop 99.7% and outflows of over 28 billion US dollars from a Terra-based decentralized finance app. This led to a loss of sentiment among Luna investors and traders, apparently even sparking public outrage in South Korea, where Terra had a huge community. Some crypto funds were hit with billions of dollars in losses. Terra's often brash founder, Do Kwon, came up with a revival plan in the days afterwards, proposing a fork of the blockchain and an airdrop to holders affected by the UST implosion. I want you guys to go all the way back to like 2016, 2017, 2018, and remember that we have never been a fan of airdrops. If the word airdrop is mentioned in any sort of white paper, anywhere, any project, immediately done. I'm not interested. We don't touch it. The plan tries to make the community whole while reviving their trust in Terra ecosystem. A blockchain fork usually refers to the creation of a new blockchain with data from the old blockchain. While this plan may seem like a fork, Terra developers have stated that Terra 2.0 will be an entirely new project and no data from the current chain will be carried on to the new one. No data being carried over to the new one. This is even worse, okay? The reason why this is worse is because now they're just doing a complete new clean slate, and that allows them to completely manipulate the supply, completely manipulate the monetary system from its very base. And that is intentionally done to, of course, try to manipulate the project and the price of the project. That is what's being done here. The revival plan, although passed by Terra's network validators, was pushed live even as results from a preliminary online poll on a hard fork plan found minimal backing among community members. And that is because why? Because the validators will benefit primarily off of this. Once again, that is the large problem with projects like this. The validators will benefit. Nobody else will benefit off of this. The community will not benefit off of this. And they just want to sucker you into purchasing a bunch and supporting it. They will sucker you in initially by allowing you to bring some of your Luna over, and then they will pay you out a little bit over time. And then they'll try to convince you that the price is good by manipulating the supply. And then you will have probably just yet another rug pull or failure. Some 92% of over 6,220 voters on a previously held online poll voted against the change, with the most popular responses calling for no fork as reported. But you know what the problem is? The community can't influence this at all. Damn the man, save the empire. The crypto security debate goes to court. Private lawsuits could help determine whether digital tokens should be treated as securities like stocks and bonds. Oh, I did forget to mention Flux has ditched Luna, obviously. And they are going to be doing a different parallel asset. I believe it's Cosmos. Investors are asking the courts to decide an existential question for the cryptocurrency industry, whether digital tokens are, for legal purposes, more similar to stocks or gold. Attorneys for cryptocurrency trading platform Coinbase Global filed a motion this month to dismiss a class action lawsuit arguing that 79 of the tokens listed on the firm's platform are unregistered securities. We've talked about this before. The fact of the matter is, from my perspective, a lot of these currencies are unregistered securities. Now, does that mean I want a whole bunch of people coming in and regulating a ton of stuff? No. So I'm kind of at this point of like, let's call a spade, but I don't need the government coming in and taking the spade away. Is that fair enough? The group of Coinbase users is demanding reimbursement for trading fees and market losses and seeking to prevent the assets from continuing to trade on the platform. Outside of enforcement actions, the Securities and Exchange Commission hasn't indicated which cryptocurrencies it considers to be securities, but federal statutes passed in the 1930s deputize ordinary investors to help the SEC do its job by giving buyers of unregistered securities the right to sue the seller for their money back. The evaporation of some 1.5 trillion US dollars from cryptocurrency markets in the past 6 months could give investors a new incentive to test that power. I was just thinking about something. I wanted to clarify it for a lot of the new people that are getting into cryptocurrency right now. If you watch my channel for a long time, you probably already know this. The reason why we're proof of work specifically focused is that we generate revenue over purchasing something in hopes that it goes up. And everything that is happening right now is a repeated process that has happened. History repeats itself, especially within cryptocurrency. This is nothing new. Everything from the bull run to now what we see with the crypto winter and diving down, and then the ensuing lawsuits and projects disappearing. This has all happened before. Nothing new under the sun, and it didn't happen that long ago. And so when you look at this, look at it through that lens of like, I realize this has happened before. It'll probably happen again. And then plan accordingly. The reason why proof of work is something that we lean on a little bit more is, once again, you have an asset that you can resell, albeit probably for lower prices, right? You're hopefully accumulating at the lower prices as well, right? If you time the market, cool, that's good on you. Some people are good at timing the market. I'm not. Right? So you could time it, I suppose, with buying cryptocurrency as well with the accumulation. But at worst case, you're still generating revenue and you're still able to function, and you aren't sitting there being part of the $1.5 trillion in losses, right? And that's the big deal here. Quote, the more money at stake, the higher the probability of litigation. And with the sharp downturn in crypto values, the incentives to litigate have turned up as sharply, said Joseph Grunfest, a former SEC commissioner who teaches law at Stanford University. Lawsuits related to cryptocurrencies are up this year. Of course they are. It's the bear market. We're in the winter. Investors have filed 8 class action lawsuits related to cryptocurrencies in 2022 so far, compared with 11 in all of 2021, according to a database maintained by Stanford University and Cornerstone Research. U.S. laws impose a meticulous regulation and burdensome disclosure requirements on issuers and intermediaries that sell securities, a category of assets that includes stocks and bonds. They also create potentially crippling liabilities for anyone who skirt the law. Cryptocurrency platforms have sought to minimize headache by arguing that the tokens they list in the U.S. are commodities like gold, which have no full-time federal regulator. For trading venues that allow U.S. investors to buy and sell scores of digital tokens, the cost of getting it wrong is potentially catastrophic, industry lawyers say. Quote, if successful, plaintiffs would have the court effectively freeze the accounts of innocent Coinbase users who, by their own choice, transact with another in these tokens, end quote. Coinbase attorneys wrote in the motion to dismiss the case. Quote, other digital assets trading platforms would likely be compelled to do the same, end quote. Once again, I want to bring you back to a little story we talked about with Coinbase, updating, of course, their policies surrounding their bankruptcy. Anything that you have in Coinbase will be used to pay off the debts of that said company, in this case, Coinbase. The assets within that they hold are not yours because you don't control the keys, and therefore they will use that to save themselves first, and you will be left paying their debts. They are clearly scared. There are clearly things that are going to be happening, specifically surrounding regulation and things like this. They are correct that their users, they're going to be basically saying, oh, the users, the poor users, the innocent users of Coinbase, you're going to affect them, will be the only ones that get hurt. And you need to learn to control your own keys. If the project does not have a way for you to control your own keys, then it was never a cryptocurrency project in the first place. If it is a difficult one, then maybe if it is a difficult coin or token to self-custody, then maybe you've learned something about that project and you can dump it, for example. You need to protect yourself. Just end of story. Coinbase's lawyers argued that its platform brings together buyers and sellers of cryptocurrencies rather than transacting directly with users. That would be true, except that you guys changed your policies that say that you clearly are responsible for the custody and that all that cryptocurrency is yours, right? For that reason, its lawyers argue the firm wouldn't be liable as a seller, even if the assets on its platform were deemed to be securities. Incorrect. Because of your policies, it is very clear that it is directly your responsibility for what you list, because you are holding it and you are telling the users that if they purchase it, they are purchasing it within your ecosystem, and anything within your ecosystem is yours, in fact, and not anybody that is actually purchasing it. You are not connecting buyers and sellers. You are a centralized exchange that holds the actual currency. You are the seller of said coin and token. That is infuriating and a bullshit line, Coinbase. And I get it. You guys are lawyers. You're going to go around and make it all difficult for everybody over there to put everything in your favor. But that is a bullshit line based on your track record and what you've said. Oh my God. Because cryptocurrency trading platforms aren't supervised by regulators and clear transactions internally rather than on public blockchains, there is a little transparency into how trades on Coinbase are executed, lawyers and SEC officials say. SEC Chairman Gary Gensler has alleged, without naming companies, on going into further detail, that the platforms trade against their customers. And I think that is true, because as they've directly told us, the cryptocurrency that you purchase on their platform is not yours, it is theirs. It is their cryptocurrency, is not your cryptocurrency. This is not, and this is the thing. If crypto's going to function properly, eventually these services go away. These services should be focused around the trading between the currency and whatever fiat system, and they should follow the rules of that fiat system. But as a participant within cryptocurrency, you should utilize decentralized exchanges as much as possible, if not exclusively, and only utilize exchanges for the swapping out into whatever fiat system you wish to participate in or need to participate in out of necessity to pay your bills or whatever it may be. Coinbase's lawyers also say the cryptocurrencies in the lawsuit aren't securities, but the issuer of one of the tokens featured in the Coinbase lawsuit, Block.one, agreed last year to pay $27.5 million to settle an investor lawsuit alleging that its EOS token was an unregistered security offering. EOS is still listed on Coinbase. Another of the cryptocurrencies in the Coinbase lawsuit, XRP, is the focus of continuing SEC litigation and is no longer available to Coinbase users. To determine whether an asset is a security, regulators and courts apply a four-part test developed in 1946 Supreme Court ruling over Orange Groves. Known as the Howey Test, it involves an investment of money in a common enterprise with an expectation of profits derived from the efforts of others. Cryptocurrency advocates say that once a token's underlying network becomes sufficiently decentralized, its value no longer depends on the efforts of an entrepreneur or manager, so it should be considered a security, or shouldn't be considered a security. But the line is often fuzzy and the facts unclear. The line is not extremely fuzzy. Like, we have two examples. We have Bitcoin, which is not a security, clearly. And we have everything else. I'm just Welcome to the Bitcoin Maximalist Show. I mean, like, there are potentials for others not being a security. That's fine and that's fair. I think as soon as anything is proof of stake, it is automatically a security. Almost. All the time. Mr. Gensler has repeatedly said many of the assets traded on U.S. crypto platforms are likely securities. He has urged the firms to register with the agency as regulated exchanges akin to NASDAQ or the New York Stock Exchange. Quote, they know that most of what they have on their platforms may well be securities, end quote, Mr. Gensler told reporters May 18th. Quote, they should move towards getting registered or we're going to be the cop on the beat and we're going to bring the enforcement actions, end quote. Look, I'm going to say it once again. You call a spade, but that doesn't mean I want the government coming in and taking my spade away. I think that's the best thing I can say to wrap that up. But the Bitcoin's looking good, boys. The Bitcoin's looking real good. I mean, like, we're having a dip here, right? We're down to 29,373 on Bitcoin, which is really not that bad if we compare it to the rest of the market, which is just, whoo, it's rowdy today, including Ethereum, which is down, I believe, 5% over here. Look at that Ethereum dip, and then we look at the rest of the market. We're having some ups there, but look at that Terra going down again. Avalanche down, Elrond down, Zcash down, Kusama down, Cosmos down. A lot are down 5 to 10%. Yet Bitcoin is kind of just sitting not super pretty, but better, right? 0.94%. So there you go. Why is that? JP Morgan backs Bitcoin to rise 28% and says cryptocurrencies are now its preferred alternative asset. JP Morgan said it thought Bitcoin's fair price was 28% higher than its current level. Cryptocurrencies have fallen dramatically in 2022 as investors have ditched riskier investments. But JP Morgan said it saw an upside for Bitcoin and crypto markets more generally after the sell-off. JP Morgan has said Bitcoin's fair price is 28% higher than its current level, implying significant upside from here after a dramatic sell-off in cryptocurrencies. The bank said in a note on Wednesday that cryptos had overtaken real estate as one of its preferred alternative assets that don't fall into typical categories such as stocks and bonds. It said it was sticking to its view that $38,000 was a fair price for Bitcoin. That figure was 28% higher than Bitcoin's $29,722 level on Wednesday morning. Quote, the past month's crypto market correction looks more like capitulation relative to last January and February. And going forward, we see upside for Bitcoin and crypto markets more generally, end quote, the bank's strategist, including Nicholas, there's no chance I'm going to pronounce that. I'm just panic. Yeah, I'm sorry. I can't do it. I know you guys give me a hard time, but I can't do that one. Wrote in a note. Cryptocurrencies have tumbled in 2022 as rising inflation and interest rates, the war on Ukraine, and a slowdown in China have caused investors to ditch assets deemed to be risky. Bitcoin is down about 37% for the year, while Ethereum has tumbled about 48%. The total market value of all cryptocurrencies has plunged from about $3 trillion in November to $1.3 trillion in May. But JP Morgan said the sell-off had hurt cryptocurrencies more than other alternative investments such as private equity, private debt, and real estate. That suggests there's more room for cryptos to rebound, strategists said in the note. Quote, we thus replace real estate with digital assets as our preferred alternative asset class along with hedge funds. That's crazy. Replacing real estate with digital assets? I think this is less about cryptocurrency being a safer investment than real estate and more about what that really tells us is that we are in a housing bubble that's about to come crashing the f*** down, boys. That's what it really is. That's what it really is. The dramatic collapse of the Terra USD stablecoin and connected Luna cryptocurrency had soured sentiment among many crypto investors, the strategist said. But they added that there was so far little sign that venture capital funding into crypto was drying up. But the investment bank said it was now less keen on alternative investments, switching them to ranking of underweight from overweight previously. Yeah, this is basically JP Morgan sensing a housing bubble pop and a housing market crash and moving their assets into cryptocurrency and Bitcoin. And I think that's probably a valid move. I'm not an investor. This is not financial advice, but that is what I get out of this. What I get out of this is JP Morgan is sensing a burst in the housing market. First mover America's Bitcoin dominance reaches 7-month highs. Alts suffer. The latest moves in crypto markets in context for May 26th. I wanted to cover this today because it is basically everything within theme that we've been talking about. Bitcoin was down 1.7% over the last 24 hours and is struggling to hold $30,000 US. At press time, the world's largest cryptocurrency bar market capitalization was trading at around 29,000. We just checked and I believe it's 29,300 or something like that. So it's still up. Ethereum took a bigger hit and was trading down 6.5% on the day, around $1,800 US. Quote, with Bitcoin's price not catching a bid to the upside, the negativity comes out, end quote, said Charles Story, head of growth at Future, a crypto index platform. Quote, the narrative around Bitcoin and crypto in general goes from a futuristic store of value to a scam, said Story. This brings down the price till investor sentiment changes and we move back to the upside. Clearly, we're going to be moving back to the upside with people like JP Morgan taking their investments out of land and real estate and putting in Bitcoin. Altcoins appear to be suffering more than Bitcoin, with Avalanche leading the drop in price. AVAX was down 12% on the day. Cosmos down by 10% and Solana's is down by 8%. I think the Flux team needs to just start being a little bit more careful with who they decide to partner with. That's all. That's all I'm going to say. In traditional markets, Wall Street had a positive trading session overnight, but has since been mixed. Bonds gained ground as traders weighed the Fed's minutes and that were less hawkish than expected. News from China overnight sent Asian markets and European futures lower. Market moves. Despite Bitcoin's market capitalization declining to $552 billion US, Bitcoin dominance over altcoins is at a 7-month high. Bitcoin dominance, the measure of how much of the total market cap of crypto is comprised of Bitcoin, has increased to 45%. The highest metrics has gone up. The highest the metric has gone up since October of 2021. Although signals for Bitcoin are still not showing signs of recovery, according to Lauren Kiss, we've tried this one before too, and I looked it up and now I forgot. Apologies. Head of Europe at Hashdex said, quote, "We may see further downward trends in altcoins as there are still strong signs Bitcoin is to remain below 30,000 US dollars." He also noted that Ether's drop in price Thursday was particularly significant, and Ether dropped about by 100 US dollars around 9 a.m. Quote, "We saw large sellers dominating the market in Ether this morning, which was fueled by losing interest. This is a clear absence of a bullish volatility currently witnessed by the crypto market." Look, man, if you're an investor and you're taking a look at the merge, right? And then you are taking a look at the fact that they don't have withdrawals for your staking. The majority of the staking will be in large centralized entities that are getting hammered with securities accusations. You don't want to be in Ethereum right now. I just don't think you want to be in Ethereum right now. But I'm in Ethereum and I'm mining it and it's absolutely awful. So here we go. It looks like somebody did donate us some workers here. So thank you for that. We're at 6 point something. Or no, we have no donated hash rate. That's mine. I guess that's nice. We're at 6.26 gigahash, but our average hash rate for the past 6 hours is only 5.97. I had a couple rigs offline. I rebooted them. I thought we were getting, I do know I had 2 offline, but it looks like we're back online. That's nice. I needed it because, well, rewards are absolute trash. Yesterday, unfortunately, was the worst day I've seen so far at 0.04 ETH. Today, we're at 0.02 ETH. It's not looking much better. We have 0.018 in the unpaid balance. And then day before yesterday, we were still doing okay at 0.07 and 0.08. Obviously, what's going on is the fees have dropped on Ethereum, and Crazy Pool, unfortunately, is not finding a ton of blocks. I am still mining Ryo as well with 2 2080 Ti's. I don't know how much I'm making. I'm making some. It is what it is, right? We're making like 11 Ryo a day, something like that. We've had a couple bigger days, but 11 Ryo a day. It's not that significant, but I would like to have some of that privacy-focused crypto laying around. Ethereum and others. The RTX 3090. There we go. 10 cents a kilowatt hour. Let's look at profitability. It's going to be bad today, right? Like we're prepared. We're prepared. Ethereum 276 a day before power and revenue, $1.99 a day after power. Under $2 a day after power on RTX 3090. It's just the way it is. Some things will never be the same. Just the way it is. Oh, yeah. We do have Zell hash for Flux in second place, provided you're mining it through Nice Hash. You get $1.53 a day after power, $2.23 a day before power. If you mined it directly, though, it's not as fun. You're $1.68 or $1.86 a day in revenue, $1.17 a day after power. There's not a lot else going on. Conflux is down to $1.40 a day in revenue. Sero is down to $1.32 a day in revenue. Xano's at $1.25 a day after and Xano's kind of a new one up here. Equilibria, $1.25 a day after power. Ethereum Classic, $1.08 a day. We do have Ergo, more profitable than Ethereum Classic thanks to its lower power consumption at $1.22 a day, which actually puts it up, I think, yeah, so above Flux direct mining. Z Classic, $1.11 a day. Cortex, $1.16. Ravencoin is under $1 a day at 98 cents a day. And if we scroll down, Fearo's way down here at 82 cents a day on the 3090. And Ryo, which I've been mining, is down to 82 cents a day on the 3090 after power. Oh, buddy, it's getting rough out here. My farm definitely went negative yesterday, but we had a few good days last week, so hopefully we get some recovery on Crazy Pool and things look better. But tomorrow is the great Ethereum hash rate migration, so we will not be getting profits tomorrow, we're all moving to Ergo. We'll be getting profits. The question is, and this is the question I have for you guys. If you are joining the great hash rate migration to Ergo tomorrow, are you going to solo mine? There's the poll. It's out. I'm curious if you're going to solo mine. Look, I'm not going to make that much. I'm going to make less. So I'm going to go ahead and solo mine, see if I can hit the jackpot, right? Or are you going to go ahead and hit a pool? And then let me know which pool you're thinking or looking at down below. All right. So let's look at hash rate. Bitcoin at 235 exahash a second. No changes. Ethereum, as always, let's take a look at 1.11 petahash a second. It's at the highest it's been in quite some time. Ethereum Classic at 26.41. It's up a little bit. It also had a 10% pump, which is one of the few, I think, proof of work coins that has pumped here recently. Let's take a look at Flux. Flux is at 1.65 mega solutions a second. Raven coin is at 2.54 terahash a second. Ergo, which we'll be moving to tomorrow, is at 15 terahash a second. And perfect timing for that difficulty dip right there. Look at that. Perfect timing for that, boys. That is nice to see. I'm looking forward to it. Mining pool profits. Really, all we need to do is check the last day, because we know Crazy Pool's been on top since then. For the last day, though, Mining Pool up in first, Ethermine in second, F2 Pool in third. We had a very, very long show. I'm going to try to get to some questions. Tag at Son of a Tech if you want them answered, or alternatively, make sure you put in a super chat, and that's the easiest to read, but never required. Always appreciated. Thanks for the 2723 in super chats up to this point. I'm not seeing them. I need to figure out a way how to save those while I'm streaming. Maybe somebody will get like a mod to start helping me there. Sorry if I missed a question. Brandon Gasper says, at Son of a Tech, relative noob looking for a hard wallet but don't have much cash to throw around. Can you suggest a cheap wallet that might also work with post-merge coins? You should just learn how to utilize paper wallets, generate one offline, and then go ahead and write that down and put it in a safe. That's the cheapest way. Full Metal Potato says, at Son of a Tech, not at 29p kilowatt hour. I barely make profit on a good day. Just got a loan for solar because F another 30% utility rise in a few months. I feel you, man. Killyfish says, at Son of a Tech, since Ergo takes so long for difficulty to change, does that mean block times are reduced? That's a good question. That would be a question probably for somebody more experienced with exactly how Ergo is functioning, right? I don't know the back end on that specifically. We will be doing, like, obviously looking at the block explorer, trying to determine what's going on with it when we start mining it this week. So let me know, though, if you see something. And I believe the devs are prepared. I know GetBlock's prepared. Daniel Hall says, at Son of a Tech, small 15 amp mining farm. Got to start somewhere. I still do have a cold wallet. Can a cold wallet earn simple percentage versus mining to Gemini? No, a cold wallet wouldn't earn any percentage because you would have to have a hot wallet for that. Because that's how it's earning it. Somebody's using that cryptocurrency to generate income off of it. Ryan says, at Son of a Tech, I have two 6600 XTs on a rig. Would you suggest starting a new rig with 3060 Ti's with the price drop. That's going to be up to you. Obviously, like right now, prices are coming down. I'm interested in those 3070Ms that we talked about earlier in the show. Let's end the poll. 76% of you say no, you won't be solo mining Ergo, and 25% say you will be solo mining Ergo. That's going to wrap it for me today. I am headed to jiu-jitsu. Make sure you go take care of your mind and your body. And we'll see you guys tomorrow for the great Ethereum hash rate migration. Huge shout out to Raptor Nodes for sending me a 6650 XT. We'll be live streaming that over on twitch.tv/blindrun this evening, and then posting the results on YouTube later this week. I'm trying to get the Twitch link in here for you guys. And we had a $5 super chat from Pioneer Smokehouses. Thank you. Says, just for your effort, hold a few hundred USD Ergo and Flux. There you go. So we'll be testing the 6650 XT. We have already tested the 6750 XT, and that was thanks to Metal Miner, who is also handling the Clips channel. Down in the description, you should find a link to the Clips channel. Be sure to go over there and subscribe. We have hit over 1,000 subscribers on the Clips channel, which is awesome. That means we are one step closer to being able to monetize it. Remember, the reason we moved the Clips channel was to essentially be able to post only original content on this channel. What that has done in return has hurt my YouTube profitability. Basically, the revenue on YouTube is very far down. So I'm trying to get this channel, basically the Clips channel, as quickly as possible up to at least being monetized to an extent. And so definitely head on over there and give it a sub. It now needs like 3,000 watch hours to essentially get monetized. And then, you know, obviously if you missed the live show, then the Clips channel is very helpful. In addition to that, if you're only interested in a single subject from the live show, you can go over there. And then finally, if there's a specific segment that you found more helpful that you want to share out, then it'll be on that Clips channel, right? You can go over there, share just that clip out and just that specific subject instead of sharing out the whole show, which can be helpful, I think, for everybody. Thanks for watching today. Be sure to hit the like, comment, subscribe, and the notification bell because you won't be getting double contented over here, right? And here's that. Yes, revenue's down everywhere. YouTube revenue down. Crypto mining revenue down. Crypto liquidity pool down. I don't have any good NFTs, but we're still here and we're still alive and we get to enjoy another day on this fantastic earth, my boys. I'll see you next Tuesday.